Stock indices are rallying off the RSI oversold condition off the monthly charts, as it did in 1974. We pointed out that this would happen before it happened, not just in this meeting. I also went to the IBD meeting and pointed this out, so I'll show you those charts. It did happen. We are not yet sure a bottom has been put in. What we want to look at is for the indices to be all trading above their 200-month moving averages and to stay there. Now, the Russell has already broken this, and the Dow and NASDAQ are sitting on it, and the S&P is still on it. So we're still in the process of this bottom. Now, this is the indices that only traded below their 200-month moving average twice in the last 100 years. One was in the 1970s for about 74 for about 6 months, 74, 75. And in the Depression for maybe 2 years, 2.5 years, like 32, 34 area. So we're somewhere, we're about 8 months now, so we're a little beyond the mid-70s. We think gold is going to break out. It's right at that $1,000 resistance. I thought it got to 990, 989 is fine. This is the inflation indicator. If gold is going up, it's telling you that it's inflation. This is the inflation thermometer. You know, it does not go up, it is deflation. As far as we're concerned, oil has bottomed, and so have other commodities. This happened either last November or early this spring, with a commodity. So we think it's done. It's not going to go to the low, and the basis of that is partially fundamental, not just the charts. It probably costs somewhere around $30-something a barrel to produce oil. So if you price goes less than that, you lose money making more. So why would anyone produce them? Let's look at gold for 3-year GLD. This is actually the ETF. This is a really bullish pattern that needs to break above that green line, and 1,033 is that left side. And you know, when it breaks and closes above 1,000 and gets into that area and stays there, it can go up really fast, maybe 1,200. If you look at that middle section, that green circle, if that black line crosses the red line on the DMI, that would be a buy pattern, you know, a buy signal. It has not happened yet. The RSI actually looks fine on this. Here is the 1-year chart. That blue line is the 200-day. It held that support in April. It did not break it, which is quite bullish. You also see the 50-day, which is the orange line cross. The definition of a classical definition of a bull market is the 50-day trading above the 200. This is this market. This is right now. It's telling you it's in a bull market. Now, if you notice at the very right side, that blue line, which is a 200, is starting to move up. That's a signal you're looking for also. You see in that green circle that we do have that buy pattern that with the black line across the red line. That would, you know, that told you to buy right at that point. That's very bullish. The MACD is above 0. The RSI is above 50. This chart looks very good and very positive. Here's silver 1 year. The reason you are having trouble right now is not just that 16 resistance, but the RSI, that circle on the top, hit 80 and it needed to come down. It was 2 over 4. Notice you have that buy signal in the middle once again on that DMI. All this is great. Oil, this is a OIL ETF, so the price is not the same as oil. Notice that in the middle, that blue line is trying to cross the red line. That would actually be very positive. And notice that arrow right here, where you see this cross, when this cross is taking place, I actually pointed out, this is the buy point for oil. Get in right now, and we actually pulled the bottom to the very day. Not only did we pull the bottom to the very day that time, but I write a blog, and on December 19th, I said, oil, the title of my blog was Oil into the Buy Zone. Right now, and that was the first bottom. And then the double bottom the second day, and we said, this is significant, and this is the bottom. This is the daily chart. That's the 200-day to that blue line. You'll want to move to that blue line. Notice you are on buy signal in that middle zone of DMI, the circle. Once again, on top, we got close to 80, we got about 78. That was overdone. It needed to come down. But notice the MACD is also over 0. This is bullish too. Okay, very long term. So we're happy. Commodities, we call the bottom of commodities. We said they already are. Dow Jones monthly, this is the orange line at 200 months was broken. We'll look at it in more detail. But notice right here, this is in 74. You got to close to this 20 line, and you actually got to the 20 line right here. This time, we saw that approaching. We said the market's going to bottom at that point. And we said it before it happened, not after, and in more than one place, and in print. So it needs the Dow Jones indices have to get above that line and stay there. They're not quite there yet. And notice when you hit this bottom in so before you went up, that was the bottom for many years. It still is. S&P actually hit that 20, and it hit the 20 again. That's what we use as our measure. Notice it's still below that orange line, which is around 1,000. So we would agree there could be trouble with the S&P at 1,000 because it will hit that orange line. So it's a little above 90. 960, 980, and we get a few more points. NASDAQ is actually leading the market and doing quite well. It really didn't exist enough in 74 to have a defined pattern. Notice it was worse this time than in the tech sell-off in the early 2000s. The RSI actually got lower this time, and we did not break that 200 month, even in that tech sell-off. We've broken that. And that's why this was a really bad bear market. The Russell has a shorter history. I mean, the 90s was the last time. It's a little worse than it was in the 90s sell-off. It is above that 200 month. It actually moved above. It's the first index to do so. Now, this actually makes a lot of sense if you're going to have a lot of inflation. What did well in the late 70s when there was inflation? Small caps had a 2-year rally, and it's Russell 2000 small caps. So it would make sense it would be doing well if we're calling for inflation. And technology does well because they can constantly cut the price. So, and the NASDAQ is leading one side, the Russell on the other. This fit here are like the same monthly charts, but only 10 years, so you're getting it close up. Notice the Dow is right at that 200, it's got a little above it. You would like to see this MACD cross in the bottom, but the bottom will take place before that cross. The monthly charts are very slow moving. And that the middle chart, the PMI, that black line, you're going to start seeing move down, which it probably will. Okay, here's the S&P. There's that 1,000 resistance, so we should all be watching this. What's happening? I don't know. We'll make it soon. NASDAQ, it's sitting right on that line like the Dow. The NASDAQ chart looks a lot healthier than the other charts. Notice MACD on the bottom, it's 1,000 minus 500, that's a more bullish trend. The Russell is above that, you can see it more clearly here. And it's, so, in the sell-off, it actually might go back down to that line. And you want to see if that holds at support. And that would be significant. Now you notice the 50-day, that's the orange line, is below that blue line. The Dow is sitting on that blue line and actually closed above it a couple of days ago by 2 points. So we will see what happens. It's trying to get above that. Your goal is for that orange line to cross the blue line and stay above it. The S&P, the orange line is a little closer. S&P broke through a few days before the Dow, and it fell back down to that line in the sell-off yesterday, but it didn't break it. NASDAQ broke through several days. It hit that 200-day in the beginning of May. It's been a long time. It sort of rode right along and then finally broke through several days ago. And as well, and if you notice that 50-day is touching that 200-day, and this chart's a day old, so it'll probably cross today. In fact, arithmetically, it had to cross today. There's no way it could. So you're getting that cross. That's a very bullish sign. You can see it keeps up. The rest of the chart looks pretty good too. We're still looking for the 200. We're still looking for the 50 to cross. That's not happened yet. Notice you have this extremely bullish pattern in the DI. You have this black line cross right here. That's very bullish. That's a buy signal. So that looks good. The whole chart looks good. Okay, that's it.